Are you looking for ways to improve your finances this year? Well, keep listening as we run down some of the ways you can upgrade your financial life. Hello, and welcome to the Wealth Minded MD podcast with your money best friends. I'm Dr. Lisha Taylor.
And I'm Dr. Brittne Halford.
And of course, we're here to help you build wealth and make good money decisions so you can create the life you desire with more control over your time.
Hey, Lisha, one of the most important financial tasks we do as doctors is protect ourselves, which means getting the right insurance. I recall purchasing my insurance policy just a few days before I graduated from residency. What was your experience?
So I got my insurance when I graduated from medical school right before I started residency. I actually called a few agents, but I had the best service from Pradeep Auto at PKA Insurance Group. He was super responsive and personable. Unlike some of the other agents, Pradeep actually got me quotes from all the major companies and actually took the time to explain the nuances in each of their policies. What I loved most is that he wasn't just this way for me. Whenever I would send one of my friends to him, he would not only speak to them, but he'd also let them know where to go or who to contact if there were better options or discounts available.
At PKA Insurance Group, Pradeep Auto and Matthew Peterson are independent brokers focusing on disability and life insurance. They excel in securing coverage for physicians and other medical professionals. Discounts on disability insurance can range from 10 to 40% depending on your situation. And there is now an A+ rated carrier offering up to $10 million of life insurance without lapse. If you are very healthy with limited to no medical issues, approval is likely in 5 minutes. Reach out to PKA Insurance to discuss your disability or life insurance needs at www.pkainsurance.com or call 1-800-258-1018.
All right, Brittne, I know we're getting into the thick of tax time, and I also know that you are in the midst of doing all the things that you need to do for your new home, for your kiddos. So what is going on with you? What is the thing that you are working on currently?
I feel like January came and went so super fast, it did not give me time to do anything that I wanted to do. Honestly, I'm still catching up on tasks for 2024, as you noticed. Well, one of the big things that is on my to-do list is completing and cleaning up our estate planning. So this upgrading your financial life title is really resonating with me because there are things that I can do by myself, but because I'm partnered, it requires my husband to do. And whenever we add an additional layer of just complexity to any process or system, it makes it less desirable and harder to do. And then it gets pushed down the task list and then it gets continued to push back. So I have not updated our estate planning or even finalized. There's one account that my husband's name is on and that my name is on, and we have to go to a notary. And I just haven't filled out the paperwork and put that account in the estate planning. So this is like a money confession and a life is lifing all together.
Man, oh man. So help me understand. When you say estate planning and opening accounts and things, is this for your house? And if so, what all is involved? Tell the people what's involved.
So, yes, the house is another thing. We have a revocable trust right now. And whenever you create your estate plan and you create your trust, you have to change accounts from your own individual name into the name of the trust. And although we are still basically like the executors of the trust right now, right? That we still have to transition everything. So, one specific account that I'm speaking of is our high yield savings account. When we move that into a name of the trust, it no longer becomes a high yield savings account. We actually have to change it from that bank into a money market fund. And that is going to require me to fill out paperwork with, okay, what is the name of the trust? When was the trust established? All of these different details, and to have that information signed by a notary. And then I have to mail that information in. So it's a 3-step process. But the part that is most difficult is just like aligning my schedule with my husband at a time in which a notary is available. And honestly, I found out that there's online notaries. So we're going to utilize them. But that is essentially what is required is that I need to move or change the name of the account account from our individual names to the name of the trust. And that whole process requires us to be in person. Now, we haven't moved the homes into the trust yet. And I need to reach back out to our state attorney regarding what is the best mode. That is something that was left kind of up in the air because of some of the estate tax limits. And so I'm still waiting for final guidance on moving our homes, especially as we're thinking about purchasing more real estate property. What is the best approach for that?
Okay, so I'm sure there are people listening that are thinking what I'm thinking, or at least I imagine that they are. Which is, this sounds like a lot. Is there a reason why you are putting your assets into a trust? Is there a reason why you chose a revocable trust? So if you could give us a little, and maybe we'll do a whole episode on the topic of estate planning and why it might be helpful. But I'm sure there are people listening going, my house is in my name or my accounts are in my name and not in the name of a trust. And so what is the reason why you and your husband have decided to kind of go through these extra steps in order to put things into a trust?
That is a great question. For me, a trust helps us to do a couple of things. It helps me to put all of our assets into one place and have it be defined on how the payout is. If I want a certain amount to go to my kids' education, etc., and when they get married, a certain amount to pay for their wedding, in the case that I'm unable to enact those wishes, then it allows us to do that, or allows the executor of the trust, so the third party who's going to be managing it upon my death, to take care of everything. And then it also allows our family to avoid probate. Probate basically just puts all your business out there of how much you have, and it's public information. So to avoid probate court and for them to just be able to inherit the assets very seamlessly and streamlined is another reason for us to have a trust. And the reason why a revocable trust, allows you to put things in, take things out, and make changes while you're alive. I don't know if it's impossible to do with an irrevocable trust, but definitely a lot harder to do with an irrevocable trust. So that's one of the reasons why our homes are not currently in the trust, because our estate attorney was recommending maybe we put the homes in an irrevocable trust versus a revocable trust. So there are various benefits, and maybe we could bring her on the podcast. I'll reach out to her because she's a wealth of knowledge. And during our conversation, she's like, now hold on, Brittne. I was like, okay, you have a reason to tell me to slow down a bit. Thank you for offering that guidance. So there's a lot with estate planning, and it is a lot of work because you have to change the names of all of your accounts. And when we're talking about updating our financial life, I know one of the things that you have mentioned, like close accounts that you don't need. So we'll talk a little bit more about that and how you can simplify your finances for this purpose. But I think it is something that everyone should start to consider once you're building assets, once you've purchased a home, once you have investments, when you have children or you have something to pass down, to think about how can you pass these things down in a way that feels most comfortable and meaningful for you.
Okay. You mentioned probate. And for those who are not aware, when you pass away, your assets go through a probate process in which the government basically tries to make sure that you don't owe anybody any debts. If you do, they use your assets to pay those debts first. And then they try to basically determine who your heirs are and give that money to your heirs. And that probate process can be inefficient, take a long time, and be public, which is why a lot of celebrities who pass away who didn't have trusts, the public is able to know, oh, they had this much money in these accounts and things like that. So Brittne is saying, hey, when I pass away, y'all not gonna know my business. That's one of the reasons why you put it in a trust. You also mentioned a little bit more nuance in the way that you pass things down to your children. Again, we'll probably do an entire episode on estate planning. Some people have mixed feelings about that. They feel like if you just name your kids as beneficiaries on your retirement accounts, they'll automatically get the money in a very efficient process. But some people don't like that because they don't want their kids to get millions of dollars potentially all at one time. And so it really just depends on what side of the fence that you lean on. But I do think that's interesting. You're doing estate planning. Every time you and I talk about estate planning, I am reminded that I have not done so. And I also have this question in my mind, like, do I still need to do this if I'm not married yet and I don't have children? I think we should probably do an entire episode on this to kind of delve deeper. But I appreciate you being transparent. You are doing your estate planning. For me, it's kind of a money confession, I guess, is I'm trying to figure out what the heck is going on with my student loans. I had a couple of really small student loans that didn't qualify for public service loan forgiveness, which I'm taking care of. One's gone. One has a few thousand more to go, and that'll be gone. So that is actually not my concern. My concern is the large chunk of federal student loans that I have that are currently in the public service loan forgiveness program. Myself, like millions of other people, are sort of trying to see what's happening. My loans are placed into the SAVE plan. That was, of course, enacted by the Department of Education when President Biden was in the White House. And of course, that was deemed, I guess, not constitutional. Maybe it's held up in the courts or whatever. So who knows what's going to go on with that save plan. While they figure things out, most of us are having our loans put in forbearance, which means we're not making payments. Yay. But then these months are not counting towards public service loan forgiveness, or at least at the current moment, they aren't. I've gotten a series of emails, some of which I'm wondering are actually correct. But I've gotten a series of emails from Mohila saying, oh, you owe this amount, or oh, you'll have to repay your loans at this date. And oh no, you'll pay it at this other date. Oh no, and you'll pay it at this other date. And so it's been kind of confusing for me as somebody who lives and breathes student loans. And so I can only imagine how other people feel. The last correspondence that I received was that most of us will not have to make any payments on our student loans in 2025. They say they're trying to sort things out and figure things out. And while they do that, most people will not have to make any payments in 2025. Earliest payments will probably be due sometime in 2026. And so that's nice for me because I'm like, oh, yay, I don't have to make these large student loan payments. But I'm also trying to figure out what's happening. My friends, on the other hand, they're like, girl, I've been forgot about those student loans. They're like making plans that do not include paying off those student loans. And it's funny because I consider myself probably a little bit more on the conservative end when it comes to that. I'm wondering what's happening with the student loans, preparing to pay them off, that sort of thing. And my friends are not worried about it at all. And it has worked in their favor for the last, 5 or 6 years. Like they're like, I don't know what's happening. And each year the things get pushed back. And so each year it just works in their favor. So we will see what happens. I mentioned, I think a few episodes prior that I had applied for other student loan forgiveness programs, just kind of like a hedge. I got one of them, praise Jesus, and we'll find out about the other one a little later.
Congratulations.
Girl, let me tell you, I think I mentioned this before. I've used student loan repayment plans as kind of like scholarship money. You know, you're applying for college, you're trying to get all scholarship money you can. Now I'm like a whole adult and I'm trying to get all the student loan repayment money I can. And I just keep finding these programs and applying for them and crossing my fingers and sending a prayer up to the Lord above. And so I'm still trying to figure this thing out, but we're in this holding pattern and I'm just learning to embrace mystery and learning to embrace uncertainty.
Well, Lisha, congratulations. That is phenomenal that you were able to secure some repayment. And I think that's a testament to many people who are still in this limbo that there are things that you can do that will be within your control. So, say, for example, some repayment option goes away and now your payments increase. Now you at least have something else to fall back on to leverage. So, Lisha, I have a question for our audience. Like, how do you go about finding some of these programs to apply for student loan repayments?
That's a really good question because to my knowledge, there is not like a student loan repayment website. All the programs you might qualify for, just, apply to all of these. A lot of it I have found is asking people around me. So a lot of word of mouth. One of the programs I got was the Primary Care Consortium, like Student Loan Repayment Award, very long name, from Emory University. And I qualified for that because I did my residency at Emory University. And so I think it's open to those who did medical school or residency at Emory and did it within a primary care sort of specialty. And I did it in family medicine. And so that qualified me. The state of Georgia, I currently live in Georgia, has another student loan repayment program for people who work in more rural areas or even for people who work in low income areas. I know the state of North Carolina has a student loan repayment program for people who, I don't know if you have to do primary care or not. I think you just have to be from North Carolina and have done some sort of training in North Carolina. But again, this is word of mouth. I learn about these programs because, again, I live and breathe student loans and I am that kind of nosy person who ask people about their student loans. By virtue of me asking people about it, I learn about different programs. I learned about this Emory program from one of my co-residents. And she was like, Lisha, you didn't get this email? And I'm like, girl, so me and emails, we kind of have a little issue. But she sent it to me and was like, you need to apply for this. And so that's kind of why I applied for the Emory one. I mentioned the NIH one because I do research. I don't know who told me about that, but I'm sure it was another physician who said, hey,
Okay.
you know what? You can get your loans repaid if you do research. A lot of this, unfortunately, is word of mouth, but I think that is maybe an impetus for other people and anybody listening that maybe you should talk to your friends and talk to other physicians about other student loan repayment programs that they might be aware of. I know most states have at least something within their state. So if you live in California, North Carolina, Georgia, whatever, go through Google a little bit, put in your state name, put in student loan, put in repayment or program, and see what pops up. A lot of these states have state specific programs. The federal government has a few big programs. A lot of people know about public service loan forgiveness, but there is also the pediatric subspecialty program. If you're a pediatric subspecialist, there's a special program for you. I think it gives you about 100 grand over 2 years. I mentioned the NIH one for folks who do research. There's also a faculty loan repayment program. So if you're a faculty member at an academic institution, I think it gives you 40 grand for 2 years, if I'm not mistaken. And so again, these are programs that I've learned about by talking to other physicians, but hopefully at least something that I said piqued your interest for those of you who are listening and also have student loans.
This is fantastic because I just spoke at a conference and I shared how I paid off my student loans. I didn't get forgiveness, didn't apply for any scholarships. Y'all know me, I'm kind of lazy in that way. I just paid them off. Everyone is overwhelmed with their student loans. So thank you so much for sharing those tips and tricks. If this is something that you can do if you're in the SAVE plan, then enjoy the time, but don't just spend all of your coins on vacation and brunch. Put that money away. And if you're not in the SAVE plan, unfortunately, I know some of my coaching clients who were not enrolled in a SAVE plan, their payments are due. And so there's still a way that you can figure out a strategy, even if your payments are required.
As physicians, one of the most important things that we can do is make sure that we secure our income, because a lot of our financial plans are contingent on our high doctor income. One of the things that you will need to do is make sure that you get long-term disability insurance.
Now, Pradeep and his team at PKA Insurance Group have a reputation for putting people over profits and always doing what's best. Do not hesitate to email PKA Insurance and his team today.
They will help you get the insurance you need with the service you deserve.
All right, Lisha, are you ready to move on to the financial focus? I feel like we've been talking about the financial focus kind of.
Yes, basically we have. So for today's financial focus, we really wanted to talk about cleaning up and upgrading your financial life. So these are some of the things, the items on my to-do list that I was like, you know what? I'm pretty sure other people could maybe benefit from this as well. And so I really wanted to talk about ways that we could upgrade our financial life and going through a list of to-dos.
Yeah. So this first to do that you have on the list is be mindful of where you keep your cash. High yield savings account, money market fund, or a checking account, which we don't recommend. But honestly, Lisha, I mean, speaking about money confessions, this is something that I always have to go through and reevaluate of how much money am I keeping in the checking accounts? Is it enough to cover our expenses? And then how can I automate putting more money into a high yield savings account? As we know, a brick and mortar bank gives us about 0.1% interest. And I think I checked the new APY, annual percentage yield, for my Discover High Yield Savings account is 3.9%. So that's 30 times more interest than I could get in a high yield savings account than in keeping my money in a checking account. And so understanding where your cash is, what accounts you have available to you, what are the benefits of those accounts, and moving money, making sure that your cash is allocated appropriately is something that I honestly say that we probably need to do on a quarterly basis to reevaluate this so that you're just not keeping your cash stagnant and that you're evaluating how to make it work best for you. What things have changed in your lives that might increase or decrease the amount of money that you actually need in cash. Lisha, I know we've spoken on past episodes about you keep a little bit more money in cash. How do you balance out where you're keeping your cash?
Yeah, so a lot of this is really focused on the goal that I have for the cash and when I plan to achieve it. So I have money in a regular savings account, which, as you stated, doesn't have a very high yield, but I use that for money that I'm going to spend on upcoming trips. And so that for me is like money that I use to purchase flights for vacations and things like that. And I'm very cognizant that I do not have more than a couple $1,000s in that account. I just like to have it there because it's connected to my checking account. So it's pretty easy to pay off my credit card when I purchase these flights. But again, I'm really cognizant not to have more than a few $1,000s in that savings account for the reason that you stated, right? I can make more money in interest elsewhere. For me, I keep my emergency fund in a high yield savings account. I use Wealthfront, But I know that there are lots of other high yield savings account plans online and banks online that you can use. Some people use Ally Bank, some people use SoFi. There's a bunch of different ones, but I like Wealthfront. I've used them for a while. I think the APY there is a little over 4%. And so I keep my emergency fund there. And for me, it's important to have about 6 months of expenses in an emergency fund. I know some people may only do 3 months, but I like to feel a little bit more safe and a little bit more protected. And so I keep my emergency fund money there. Money that I am utilizing for large upcoming expenses within the next couple of years, I actually keep in a money market fund, which is very similar to a high yield savings account, but I keep it in a money market fund and I keep it at my brokerage. So I use Fidelity for that. I really like that. That account, when I log into my Fidelity account, I can not only see the money in my money market account, but I can also see the money that I have in different work retirement accounts. And so I just like to keep things in one place there. But for large upcoming expenses, whether it is me buying another car, buying a home, that sort of thing, I put that money in a money market fund. And so that's kind of how I have the things separated for me: upcoming vacations in a regular savings account, emergency fund in a high yield savings account, and then large upcoming expenses within the next couple of years in a money market fund. So that's kind of how I do it.
Now, why do you put your large upcoming expenses in a money market fund instead of just creating a separate account in a high yield savings account?
Good question. I think at Wealthfront, you can only have one high yield savings account. And I really wanted to separate out my emergency fund from large upcoming expenses because, as we stated earlier, I cannot be trusted. So I can't be trusted to not spend the money in the emergency fund. So I wanted to keep it separate for that reason. The other reason is that I have money that automatically goes from my checking account to my money market fund each month. For me, it's helpful to be able to log into Fidelity and know that I have money automatically going to that money market fund each time. It's also helpful for me to have money in a money market fund because it makes it easier for me to do things like my backdoor Roth IRA, right? The money is already at the brokerage firm. So there's less of a holding period whenever I'm trying to transfer money from cash in a savings account to money that I want to invest. So I like to have a little bit of money in a money market fund. And again, it's safe there. It's earning a pretty high interest rate. And so that's kind of the reason why I've chosen the money market fund for some of that stuff.
See, everybody has a different approach. So I was just wondering because I set up different accounts in our high yield savings account. And
Ah,
like you said, it's easier. We do have a Fidelity account, but for me, I like have my emergency fund with the amount that we need there. And then I have a tax. I'm always saving for
yep,
taxes, people.
yep. I
And
hear
my
you.
high yield savings account. So it's like different accounts, but it is specific. It's different and specific. So all the money is not blending together. Great approach. Thank you for sharing that. I'm always learning new ways of doing things.
Yeah, it's so funny. I also have another money market fund that I use for taxes. And I keep it there because I'm like, yep, I know I'm gonna have to pay the tax man. And I'm just like, whatever it is, I know I have the money saved, or at least I hope I do. Any excess that I have saved, I just put into investment accounts. And so again, it's easy just to have the money in one place there. All right. Number one, we talked about being mindful of where you keep your cash. As y'all know, I keep my cash in different places. Number two is canceling credit cards you may not need and swapping them out for ones that you do need. Now, if you are somebody that does not do any credit card hacking, that is like Lisha, that is just not my thing. Totally get it. Maybe you just have one card that you utilize for everything and that keeps your life simple and that's what you prefer. I think that's totally fine. But for someone like me who was like, look, I got to pay for these things anyway, I might as well utilize a credit card and get some free points for it. That's kind of my philosophy. I like to utilize credit cards for a lot of my purchases. And if I'm going to utilize a credit card, I obviously want to utilize the one that's going to give me the most points. As we all know, most credit cards will give you bonus points or extra points in certain categories, but may not give you bonus points or extra points in all categories. And so for me, it's like, all right, where am I spending the most money? What card can I utilize when I'm eating out? What card can I utilize when I'm buying groceries? What card can I utilize when I am traveling? What card can I utilize when I'm buying flights and things like that? And again, making sure that I have the right credit cards that give me bonus points for the right categories. Recently, I had two of the same credit card, mainly because when I first got them, they gave me a huge bolus of points. But then I said, you know what? The annual fee on one of these cards is very high. And so I'm actually going to cancel one of these cards and just use the other one. For me, there's this, if you're also like me and you do a little bit of credit card hacking, there's also the need to take some time and say, all right, how many credit cards do I have? Do I need all of these cards? What is the annual fee that I'm paying for these cards? Am I getting enough value out of the card to justify the fee that I'm getting? Am I getting enough points from utilizing these cards that, again, make me want to keep them? And then for some of the cards, I will cancel. For some of the cards, I'll do a product change to maybe a low or a free annual fee card. A part of this is me thinking, all right, how can I clean up my wallet? I don't want to have 30 different cards in my wallet. Which ones do I use on a regular basis? Which ones do I not? How can I get rid of some? That sort of thing.
Well, Lisha, I'm glad that you bring this up because you have inspired me to do this whole credit card hacking thing. And when we first had our episode about credit card hacking, one of the things that I guess is a money mistake is I'm an authorized user on two of my husband's accounts. And now I have this app that I have not fully updated yet that helps me to keep track of when everything is going to renew, because that's one of the things, right? If you want to cancel the credit card, you want to cancel it or downgrade it before the renewal date so that they don't charge you that fee. And so I'm still trying to separate myself from some of the accounts that I'm an authorized user on. And then I'm also asking myself, do I want to open up another credit card so that I can leverage the sign-on bonus, or my husband can get the referral bonus or something like that? And what is going to be the benefit? So I think that this is a great step. And if you are someone who's married or partnered and you are authorized user on somebody's card and you want to break away, then get together with that person, figure out when they renew so that you can cancel your card before the renewal date so that they don't charge you that fee for being an authorized user.
Yeah, yeah. And figuring out, do you need to be an authorized user? Is it best for you to get your own cards? And I think we had talked about on prior episodes the importance of financial autonomy, especially for women, and how a lot of women, especially women who are partnered, tend to be authorized users on their husband's cards instead of having their own cards. And although that may create simplicity in the household finances, it also may negatively impact the woman's ability to really have her own financial identity. If the credit is always in the husband's name, then you're kind of building the husband's credit score and not your own. And so it's important to maybe think about what are ways that you can still maintain some financial autonomy, even if you all do combine finances, especially if you're someone who's thinking about credit card hacking and wanting to accumulate credit card points that you can utilize for free travel or just extra money. It's oftentimes better to have your own cards in your own name than to just be authorized users on your partner's cards. And so really thinking about that. Brittne, you mentioned the annual fee. What I've found is that a lot of these companies will refund the annual fee that they've charged if you cancel the card within 30 days. And so for me, although I still need to keep track of when cards renew, usually when I get that balance and I see the annual fee is there, I'll be like, okay, let me make sure, see if I need to cancel it. And they'll usually renew that annual fee if I cancel within a certain period. So that's helpful for me, but I also do need to keep better track of when I'm opening certain cards, especially around this time of the year when I know I'm going to have a tax bill coming up. This is usually the time of the year where I think about getting a new credit card. Like, all right, I know I'm going to pay thousands of dollars to the tax man. I might as well get a new credit card and sort of meet the sign up bonus and utilize this as an opportunity to get a bolus of points. This is usually around the time that I think about doing that. I will probably do that this year. Those are some things I guess are top of mind for me when it comes to taking inventory of the credit cards that I have.
Okay, Lisha. So I have a question, a follow up question, and we'll be able to move on, people. But when you are canceling a credit card, so say you cancel or downgrade a credit card with Chase,
Mhm.
do they look at, oh, you just canceled this credit card. Why are you opening up or applying for the same credit card? Do you know if they give any type of oversight to how many of the same credit cards and then when things are being canceled or downgrade before they will permit you to open up another one?
That's a great question. I want to say first that different banks and institutions may have different rules on how they view this, right? Chase may be different from American Express, which may be different from Capital One, Citi, etc. I can tell you that standard practice is to not cancel a card within a year. So usually if I've taken out a card, I'm not going to cancel it before the first year. That is a quick way to get a bad relationship with banks and to be kind of blacklisted from taking out any more credit cards. So whenever I take out a credit card, I always keep it for a year. And then I'm evaluating after that year if I still want to maintain it. In terms of canceling cards and still being able to open up new ones, yes, you can, as long as you wait that first year. So for example, for American Express, I just canceled one of my American Express business gold cards and I got another offer in the mail to open up a new one. For Chase, I think I have two of the same cards. One of the cards, I have two versions of it. I have it for different businesses, but I didn't have any issues getting approved if I wanted multiple versions of the same cards or if I wanted to cancel one card and then open up a very similar card shortly thereafter. And so I haven't been as concerned about that. I haven't had any issues with that.
That's great to hear because as we're trying to work towards simplicity, right? You said you don't want to have 30 cards. So canceling some and getting the others as a replacement so that you can kind of keep the number to a manageable level. All right. Well, Lisha, number three you have is get a student loan plan. And girl, you talked about student loans and your life is lifing. And as someone who has paid off my debt but helps women to pay off their debt, the student loans have been so crazy right now. I just teach them to, okay, here are the things that you need to know. Like with income driven repayment options, if you want to refinance, here are some of the things that you need to look for and how to create yourself as a best candidate for refinancing. I'm not saying that that's the best approach right now because of the economic climate and high interest rates. But when you are thinking about creating your student loan plan in this uncertainty where things are constantly changing, what do you recommend to people as far as learning skills that will be transferable regardless of what happens to student loans right now?
Yeah, well, I think for most people, I'm telling them, hey, make sure that when they finally become due, you had the money to pay them. I mentioned in the beginning of the show that a lot of my friends, because they've never had to pay on their student loans, or at least haven't had to pay on them in the last 5 or 6 years, they've sort of forgotten it, out of sight, out of mind. And although that's worked for them, there is going to become at some point where some payment is due, and making sure you have room in your budget when that time becomes available. In terms of switching plans, a lot of people are trying to get out of the save plan because their loans are stuck in this forbearance period and are thinking about switching to a different plan. Some people have done that, some people have not. The advantage of switching plans is that maybe you can start back that clock for public service loan forgiveness and start getting these months counted. The disadvantage of doing that is in order to switch plans, you have to update your income. And a lot of people have had a drastic income increase over the last 5 or 6 years. And so they're balancing, do I wait it out and see what happens? Or do I switch plans under the understanding that I'm going to have to pay drastically more? For some people, depending on where they are in their student loan repayment journey, may choose one option over the other. I know a lot of people are like, hey, this is inconvenient. Hey, this sucks or whatever. I want to switch. And what I can tell you is that I have decided to stay the course. I find that the representatives at some of these student loan repayment companies are, let's just say, not as skilled as I would like. The holding times are very long. Sometimes they don't always give the most accurate information, which I know can be frustrating. I just think I'm not the only one in this situation. There are millions of people affected by this. At some point, they are going to figure this out. I'm still 3 or 4 years away from forgiveness anyway. And so for me, I'm just like, you know what? I'm going to wait it out. Whenever I try to do something different, the process is not as streamlined, the process is not as efficient. And so I can come up with the best plan that will save me the most money. Sometimes it's hard to execute because it depends on other people and other systems that are, of course, not as efficient. As you mentioned, things change all the time. So for me, I've decided to stay the course and just make sure that when I do have to start repaying my loans, that I have money in my monthly budget to do so.
Yeah. And I recognize that we're talking a lot about the chaos with student loans as far as federal student loans. And many people still have private student loans that
Mm.
are at a fixed rate that might become due. And so when you're thinking about your private student loans, like Leisha said, I think the strategy still applies is to understand that you have the cash flow to pay off these things, to anticipate what your payments might be based upon that interest rate. And there are many different calculators that can help you to create an estimate for that student loan payment and start to build that into the budget. Say if you're a student listening to this, then have an understanding of what that payment might be if you do not refinance. The goal could be that you would want to refinance. And basically, when we say refinance, it's basically just taking your loan from one lender to another lender that is going to offer better terms. And that better term might be a lower interest rate, which is what I did to pay off my loans. I basically took them from the federal government with 6.8% and refinanced them with SoFi for 3.5%. But when I did that, I lost some things. When I did that, I lost some of the benefits of the federal government when I sold my loans to a private company and refinanced them. But if you're going from a private company to a private company, then the benefit would be a lower interest rate. I say all of that to say that if you are a student and you have private student loans, then you want to understand what those payments can be and incorporate that into a future estimate of a budget. Because when you're transitioning into your new job, you need to be able to negotiate your salary to better understand how much you actually need in order to cover your student loans, be able to pay your rent, and live some meaningful existence. When we say get a student loan plan, even if your student loans aren't due today, at least having some foresight of of what they might be, using some of the estimated calculators online could provide you with a better idea of what you need as a monthly salary in order to cover your student loans, all of your living expenses, and still have some left over for joy, savings, investment, therefore.
Yeah, I agree with you. The other thing, is interesting, Brittany, is because of this current economic environment, I have found that a lot of people who may want to refinance their student loans are actually not getting a good rate. And so
Mhm.
for a lot of people, it probably makes sense to just kind of sit tight right now. The rate that they would get from refinancing isn't necessarily lower than the rate that they may already have if they have federal student loans. And so it just might be helpful to sit tight. I also hear what you're saying. Like, hey, girl, if you already got private loans, you may just want to keep shopping around and just kind of seeing what rate you can find. So I would definitely encourage people to really have a student loan plan and at the bare minimum, carve out room in their budget to pay it. The next thing on my to do list is to consider consolidating accounts. And by accounts, I mean retirement accounts. I actually haven't consolidated them, but they are still in one place. What do I mean by that? I still have money in retirement accounts from old jobs, but thankfully for me, all of those retirement accounts are managed by Fidelity. And so when I log into my Fidelity account, I can see, oh, this is how much money I have that's still being invested from the retirement account I had at Emory. And this is how much money I still have that's currently being invested from my retirement account at UCLA and my current job and so on and so forth. And so thankfully for me, I didn't actually have to merge all of the accounts together in order to be able to have them in one place. But other people listening to this may not be so fortunate. Maybe the retirement account that you had at your first job 5 or 10 years ago is housed at Vanguard, and your current retirement account is housed at Charles Schwab, and then a retirement account that you had at some other job is housed at Fidelity. And so there are all these different places. And if that is the case for you, you may actually want to consider merging them together, basically transferring the money from a retirement account that you had at an old job and rolling that into the retirement account at your new job, just so that all of the money is in the same place. Again, this isn't mandatory, but I find that some people, when they don't do that step, they forget, right? They forget that they've got money at this retirement account that's housed at Vanguard or this retirement account that's housed at Charles Schwab or whatever the place is. And then when they're trying to do things that you talked about earlier in this episode, Brittany, which is do their estate planning, name beneficiaries on their accounts. Maybe they've gotten married and they need to update the beneficiary on their account. Maybe they opened a trust and they need to put the account into a trust. If you've got all these different accounts in all these different places, it can make it hard to manage and it can be easier for you to forget something. And so that's maybe one of the benefits of having it all together. And that may be something that you want to consider is just making sure you know what are all the retirement accounts I have, current ones and ones from prior years. Are they all at the same brokerage? And if not, maybe I should consider consolidating them.
Lisha, I love this step. And it's also bringing to my remembrance that I need to think about also my healthcare savings account, my HSAs that I had at other employers that I have invested but have not transferred over, et cetera. And so this is a great reminder. Another thing that it's bringing up for me is I didn't do a rollover. I actually did a conversion. So I took an old 401k and I converted it over into a Roth IRA. I understood that I needed to pay taxes when I did that because I was basically taking pre-tax money and converting it into a post-tax account. So I needed to pay the taxes on that. When I did it though, it was at a time when I had cut back. It was like after I had taken maternity leave and went down to 70%, right? So I was like, okay, yes, I'm making more money than I made when I started this 401k, but it's still less money than I would be making in the future. So let me do this conversion now. So if you're someone who's thinking about scaling back at some point and anticipate that in the future, you might earn a little bit less, then that might be the moment where you want to take some of these old accounts and actually do a conversion over into a Roth IRA so that you can pay less taxes on that money during that conversion process. But figuring out a plan in order to make things simple is a great start. And Lisha, thank you for reminding me of my old HSA that I need to transition.
Speaking of retirement accounts, my next to do list is to make sure that I've increased my retirement account contribution for 2025. When we went from 2024 to 2025, the maximum contribution that you can make as an employee increased. It increased by $500, which is not like a huge increase, but it's still an increase, right? And so that is always a reminder for me. Do I need to update the percentage that I'm contributing each month to my retirement account in order to make sure that I'm contributing the maximum amount allotted? I'm not sure how it works at your job, Brittany, but at my job, you have to basically put what percentage of your paycheck do you want to go towards retirement each paycheck. For most people, they're like, okay, I want to contribute the maximum, but I don't see a button that just says contribute the maximum. So you actually got to like do some math and figure out how you can actually contribute the maximum. And the math is not complicated, but it is an extra step that I find that some people may not know how to do. So if you're in that camp, no worries, I got you covered. It's very, very easy. You put how much money do you want to contribute each year? So if you want to contribute the maximum, then the number that you would input would be $23,500. Again, if you're under the age of 50, if you're over the age of 50, you can contribute a little bit more. But for me, since I'm under the age of 50, I put $23,500 into my calculator, and then I divide that by my yearly salary. What number I get tells me the percentage that I need to put in to Fidelity or to my job to tell them how much to take out of my paycheck each month to make sure that I'm contributing the maximum. We know that the max contribution has increased by $500, but if you're someone who has been fortunate enough to get a raise, then you also need to redo this contribution rate and make sure you have the right percentage. Because a lot of these jobs, right, if you keep the same percentage from years prior, you're not going to be contributing the maximum amount, which means you're going to be leaving potentially some free money on the table in the form of a match or in the form of tax savings. And so for me, it's always important to make sure, oh yeah, did I update the contribution percentage this year? And if not, let me make sure that I go do that.
That is a great reminder and something that I honestly try to do right before the year ends. I like to do the research before the year ends just because when the year starts, it is a little fast for me and I don't always have time to adjust. And we also want to make sure because adjustment takes some time, right? It usually takes like 1 or 2 pay periods so that you do this early on so that you don't have to increase it so much towards the middle or the end of the year that you're not able to cover your other expenses. And thinking about increasing, Lisha, increasing our tax withholdings, especially if we're going to make more money or make additional income and 1099 income. And I can honestly say that because we have a CPA that we pay for to help us with estimating our quarterly taxes, I don't do this often. But as I'm reflecting on this step, I wonder if this could be one of the ways it just helps me to alleviate some of the burden, some of the shock that I get every time I have to pay in for my quarterly taxes. If I actually adjusted my tax withholding with my employer and had it taken out automatically month to month, then I would have to pay in less at the end of the year. What is your approach? Because this is not something that I typically do, but I can see the benefit in doing so.
Yeah. I mean, they've updated the new, I think it's the W-4 form where you can try to figure out how much money you'll have to pay extra in taxes and they can have that exact amount taken out. I have not found that to be as helpful for me just because I am not always sure how much money I'm going to make in 1099 income each year. It's hard for me to input an exact number. But what I do is I try to make a guess and I say, all right, about how much money do I think I'm going to make in extra income? Let me just an educated guess. Maybe it's 20,000, maybe it's 30,000. And I say, all right, what federal tax bracket do I think I'm going to be in? Or is it the 32% tax bracket? Is it the 35% tax bracket? What have you? And then I say, all right, do I live in a state where there's state taxes? Yes, I do. So now I have to add in whatever the state tax amount is. Am I going to have to pay any FICA taxes, payroll taxes, which means Social Security and Medicare? Usually as a physician, I will hit the cap on Social Security, but I will still have to end up paying more for Medicare. Let's say I think I'm going to be in the 32% tax bracket. I don't know. Then I will maybe add another 2 or 3% for Medicare taxes. And I'll say, all right, that's around 35%. So if I think I'm going to make $30,000 this year and I will have to pay around 35% in federal taxes, all right, $30,000 times 35% is what? Somewhere around $3,000-ish dollars. Okay. $3,000-ish dollars divided by 26 paychecks in a year, because I get paid every 2 weeks, is what dollar amount? And I will usually have federal withholdings take out that amount. If I think, oh, there's a little leeway here, it's a little too much, I might just say, okay, just take out another $200 each month or take out another $300 each month for federal tax withholdings. So that's something that I do. And then I do the same thing for my state tax form. I'll estimate how much money do I think I'm going to make in 1099 income, say what's 5% of that, because I live in Georgia, state tax amount is around 5%, and I will have them take out that amount. Some people will do something similar to what I did and then have them take out a little less than that because they're like, oh, I'll probably have some deductions and things like that. So that will lower my overall tax amount. But that's generally how I do it. Since I'm not always sure, lately what I've been doing is just saying, you know what, take an extra $300 per paycheck for feds, take an extra $100, $150 for the state. And that'll at least have some extra tax withholding that will account for some of my 1099 income. And then when it's time for me to file my taxes in April, I will just pay the remainder. So there's different ways that people do it, but that's sort of how I approach it.
Lisha, that's a great approach. Thank you for sharing that. And, it's something for me to think about and talk about with my husband as well so that we don't have a huge tax burden at the end of the year. I think budgeting it into our monthly expenses where we have additional cash flow, especially if the cash flow is not needed. I mean, if we have some purpose for the cash flow, then of course we should use it. But otherwise, I think it's worthwhile for us to adjust to just provide some ease and peace of mind towards the end of the year. And number 7 we have is reevaluate your insurance needs, car, disability, life insurance. And I know that this probably really resonates for a lot of people. We've seen natural disasters all over the US recently. It always makes me think about, do I have the right insurance? Liability insurance and also personal property insurance for our homes, for our cars. This recently came to head for us as a disability insurance. We have the increase in benefit rider, which we can increase our benefit if our income increases significantly. Do I have the right amount of life insurance? And recently I actually increased our life insurance policy just to make sure that we had enough to get the kids through at least the first couple of years in college, because when Kevin and I got our insurance policies, our life insurance policies, we didn't have any kids at the time. So I'm glad that you have this on the list. It also feels a little bit overwhelming sometimes when you have to evaluate these things, because brokers don't always give you the right answers, or they try to sell you some things that you don't need. What is your approach? For me, I just kind of look at the policies that we've had and reevaluate what our priorities are and how our life has changed and go from there as far as making changes. But do you have any good sources of information that you kind of lead people through when you're talking about upgrading their insurance that can help them to obtain a foundation knowledge and an estimate of what they might need and a target that they might need to meet as they're reevaluating or reshopping these insurance policies?
You know what, Brittany? I will confess that I have not done this as much, and it is something that is on my to-do list. The amount I pay each month in car insurance is astronomical. And each
Mm.
time I tell somebody, they're like, yeah, Lisha, that's a lot. I think when I include car insurance, my umbrella insurance policy, and my renter's insurance, it's like $370 a month, which is a little high for my standards. I think that's very high for someone who drives a relatively old car and like whatever. So my friends keep telling me I need to shop around. And so that is going to be my advice, is to shop around. I have State Farm insurance, but maybe I need to look into Progressive or Geico or whatever. In terms of the amount of money that you need for car insurance, I just say you need enough to be able to take out an umbrella policy, right? You want to be able to have extra coverage in case someone sues you for some other reason, whether it's a car accident or something else. Usually, if you contact the car insurance companies and you say, hey, how much do I need to increase my policy in order to qualify for umbrella insurance? They will let you know. But that's kind of how I evaluate how much car insurance to have. In terms of disability insurance, you want enough to be able to cover 60% of your income. The thought process is, if you are disabled and unable to work, you want to be able to replace your income. And since most of us pay around 30 to 40% or so in taxes on our money, we want to be able to replace our post-tax income, so around 60 or 70%. Most of us get some amount from our job up to a certain limit. Usually it's best to take out your own individual insurance policy to cover the remainder. When I add in the amount of disability insurance coverage I'll get from my job, plus the amount that I have on my own, it amounts to around 60-70% of my income. So that is how I factored that in. Of course, if you don't have enough, our sponsor for this episode, PKA Insurance Group, will be happy to assist you. In terms of life insurance, Brittany, I don't have my own individual life insurance policy. I think we talked about this before. No one depends on my income to survive. I do not financially support any other human beings besides myself. My parents are self-sufficient. My brothers are self-sufficient. I do not have children. I am not married. And so if I were to pass away, I would love to think and believe that my family and friends would be really sad, right? But they wouldn't go bankrupt. And so I don't have my own individual life insurance policy. That being said, I do have a group life insurance policy that I get for free from my employer. And I think it's 2 times my salary. So if I were to unfortunately pass away, my family or my beneficiaries would get whatever 2 times my salary is distributed to them, which I'm sure would make them more than happy. That's currently what I have. When I get married, when I have children, I will obviously take out my own life insurance policy. And the general rule of thumb is you want to have at least 10 times your household income in life insurance. So if your household income is $200,000, then you want to have around a $2 million policy-ish. And so those are some general guidelines. We'll probably do a whole episode on life insurance, what type and how much to get, but those are some general kind of rules of thumb.
Awesome. All right. Alicia, I think you're much better at this next one than I am, which is keeping record of business expenses as you go and categorize. And towards the end of the year, I am always looking for receipts. I am always trying to update our bookkeeping. I'm making sure that I've taken advantage of every possible tax deduction that I can. And I continue to look for receipts in January and February just to make sure that I have not missed anything. So I really like that you have put this on here. And I know that you do our bookkeeping for Wealth Minded MD. And you're like, hold on, Brittany, let me put this on the spreadsheet. And I'm like, oh, I need to do that. I need to do that. So I think that this is a great step for us. And just also understanding that, at least for us, when we transition from our old home to our new home, now we have two offices and home. So that gives us more expenses, our home expenses that we can use as business expenses because we use our offices for our businesses. So I think that this is a great thing to put on your to-do list on a quarterly basis if things have changed, not only to do just regularly, but also taking advantage of some of those office and home deductions and other things that might come up as your life changes.
Yeah, yeah. I put this on here because I have learned the hard way the ramifications of not doing this. Whenever I am doing my own taxes, I have to categorize things. And so it's helpful for me if I've already listed that out. I have to list my expenses. And each year I try to get better and better. But each year I find, let's say, room for improvement. Each year there's like, oh, yeah, this expense. Oh, yeah, that expense. And it just takes so much of my time. And so I'm like, okay, this could be better if I did this as I went along. If I didn't just try to scour my email and my bank statements when I'm trying to file my taxes each year. Instead, if I listed things out as I was paying for them, it would make things easier. Those are some of the things that help me. It also, Brittany, helps me figure out how much I'm going to pay in taxes. I don't know about you, but I do not enjoy getting a surprise tax bill. I at least like to have some sort of idea of how much money I'm going to have to pay in taxes when I file my taxes each year. And in order for me to have a semi-accurate estimate, I need to know how much money I've spent in business expenses and how much revenue I've gotten. And in order for me to kind of estimate that, I have to do the calculation. And so for me, this is also self-serving because I need to make sure that I've got enough money to cover the tax bill. There's nothing worse than having a large tax bill and being freaked out because you don't have enough money to pay it. And so I've tried to set aside money in a money market fund for taxes whenever I get 1099 income. Whenever I get paid, I automatically put 25 or 30% into a money market savings account for taxes. And so that helps give me a little peace of mind. But again, I like to know, hey, I got a good chunk of money in this tax, account. Can I use a little some of this for this upcoming vacation? Or am I going to need all of this to pay this tax bill? And so those are the questions I'm asking myself as I'm thinking about new trips and things like that. I'm like, well, I keep looking at this large balance in the tax fund. And I'm like, I wonder if I can use some of it. So anyway, those are some of the perks of kind of keeping your records as you go, at least for me, because it helps me get an estimate of how much I'm going to pay in taxes.
Love that, Lisha. You are much better than I am, and you're inspiring me. I think because we have a tax strategist who helps us and tells me, pay this quarterly tax, do this, do that, and forces me to do the bookkeeping at the end of the month. I don't think about categorizing the expenses as I go, but I can see how maybe I can incorporate apps on my phone to help me to do that. Some things I'm purchasing outside of the home, I may not have access to my computer or spreadsheets, etc. Another way that I've done this in the past is just making sure that I use the specific business credit card and using QuickBooks and just paying for the monthly subscription because I'm like, how much time will I spend trying to find the receipts and all of the things? So just having a software that helps me to do this seamlessly. Now, the software and subscription is not cheap or free, but again, thinking about the time, the ease, the energy, the peace of mind, I think it's worth the value.
Yeah, I agree with you. I have not purchased software, but I've considered it for some time, mainly for those reasons, right? Could it make things easier for me? One of the things I've tried, I'm a little on the cheap side, is maybe if I kept better records, this would be a little bit easier. So I'm trying that approach right now. We'll see if I switch over to using bona fide software. The last thing on our to-do list is something that you had already talked about earlier, which is updating your estate planning. This is a reminder to me to actually do estate planning, which I keep saying each year, but I do need to write a living will, right? I do need to make sure that I have at least put in beneficiaries on all my accounts, retirement accounts, things like that. It's like, okay, if I were to pass away, who gets the money? And I'm sure when I get married, when I have children, those beneficiaries will change. Right now, they're listed as my parents and my brothers, which I'm sure they're not going to complain about free money, but I might need to update that. And for anybody listening, if you've gotten married, maybe you do want to add your spouse as a beneficiary, right? If you've gotten divorced, unfortunately, maybe you want to remove your ex-spouse as a beneficiary. And so just making sure you've got beneficiaries on your work retirement accounts, on any other investment accounts, on your checking and saving accounts, on your insurance policies, things like that.
Yeah. In addition to adding the beneficiaries, when you do this, also create a Word document or a spreadsheet of where all your accounts are and who the beneficiary is. I think that that's a really great approach because sometimes, like Lisha said, you might have an old 401k that you've just left it there because it's easy and maybe it has low expenses and you want to just leave it there. It's not very complicated, but your family doesn't know that, right? So you want to make sure that you're giving your family at least an updated list of where things are if they are the beneficiaries as well. All right, Lisha. Now let's transition to fun money.
Let's do it. Brittany, I have to admit, I tried to be really healthy in the month of January. Unfortunately, in the month of February, I have not been as healthy. Part of the reason for that is I have set myself up for failure. What happened was I was minding my own business, walking into the break room at work, and I saw this flyer that I shouldn't have seen. And it was a flyer for some Girl Scout cookies. Now, you know, I'm a sucker for some Girl Scout cookies. I love me some Girl Scout cookies. And I saw the flyer and let's just say my eyes were bigger than my stomach. And I started ordering different boxes and flavors. I said, ooh, this is a new one. Let me try this. Ooh, that's a new one. That sounds good. I bought so many boxes of Girl Scout cookies, which, as you know, are not cheap, but I rationalized it and said, I'm helping out the Girl Scouts. Then this big old box of Girl Scout cookies came to my house. And girl, I've been opening them and I've been eating them. I'm just like, why am I doing this to myself? I try to close the box and put it away. And I'm just like, nope, that taste was so good. I want some more. So that's what I've been spending my money on, feeding stuff in my face with Girl Scout cookies.
Well, Alicia, I find this hilarious for a couple of reasons. One is that when you talk about these Girl Scout cookies, your voice changes. It deepens a little bit, like Southern twang. You're like, oh, girl, you know I love, you must really love these Girl Scout cookies because here you are romanticizing. I can see it. And then we talked about Girl Scout cookies in past episodes of how you spent your money last time on Girl Scout cookies. So I'm happy that at least this is a consistent thing that brings you joy. It's not like an impulse buy because clearly you purchased them last year. You enjoyed them as much last year as it seems like you're enjoying them this year. I have made a commitment to not eat sweets until April.
Oh, wow.
Until Easter. So I've been fasting from sweets. I just found that I am a sweet tooth. There's diabetes in my family. And when I was happy, I would go to our candy bucket for our kids that's really high up so that they can't access it, but I can. And Brooke is always like, Mommy, why do adults get to eat all of our candy and you only give us a piece of candy a day? I just realized that it was something that I was doing too often. When I was happy, when I was sad, when I was bored, I was relying on sweets. And I just decided that I needed to make this commitment that's going to be bigger than myself. So my husband brought a Snickers home the other night and I said, baby, you know I'm fasting for sweets. And he was like, yeah, but I just got it. And I was like, but let me tell you about my God that's greater than your Snickers. And he was like, that's okay. I eat the Snickers. I'll eat the Snickers. And plus we serve the same God. So it's okay. So I am not spending my money on sweets. But what I have purchased that is not necessarily fun, but it will lead to a lot of fun down the road is some different safety belts. Typically, when we travel as a family, we're lugging these heavy car seats to the airport. We have to check the bag and then we have to get them and install them. So I found online that there are these safety belts that you can basically put in like a small compressed book bag, allows for the child to have the harness, like the 3-point harness, and then you slide the regular seat belt through the kid's safety belt. And so I'm really excited about that because my husband would always complain about the car seats. And this past trip, they actually lost our luggage and lost the car seats. We're able to get loaner car seats, but it's just like, okay, this is something that I want to keep on me. This is something that I want to downsize so that we're not having to go through the line if we only have carry-ons. It will save us a lot of time and energy. So that's what I've spent my money on recently, and I'm excited to use them.
You know what? This is one of those instances where I realize like the extra effort that is involved when you have small children traveling. Because I do see this, people who have kids, and I'm like, Lord bless them, right? They got the stroller, they got to bend up and fold, and it's bulky, and they're trying to stuff it into a bag. And I'm like, hold the baby at the same time. Their drink is spilling, the baby is crying. And I'm like, oof, that just sounds inconvenient. Or even just going through the TSA line, right? They've got breast milk, they got to check it, the person has to test it. It's like a whole thing. And I'm like, oh my Lord. Whatever you can use to help make this process more efficient, I am about it, girl. More power to you.
Yeah, I'll let you know how they work out. This will be our first time, but I think it will save us a lot of time, energy, and effort, especially as we're getting into taxis. Like the Uber, they just look the other way when you come with kids in car seats. They're like, oh my gosh. So I think it should be very helpful. Well, we want to say thank you for listening to this episode. And we hope that some of the to do items that we have listed, you will actually take action on to help you to improve and upgrade your financial life in 2025. And until the next one, stay wealth minded. Hello, and thank you for listening to our podcast. And because of that, we have something for you, our Wealthy Minds Blueprint.
Have you ever thought to yourself, I wish I could be better with money? Do you want to start investing and saving for retirement, but keep delaying because you don't know where to start? Our Wealthy Minds Blueprint is here to help.
This guide will teach you what you didn't learn in your training so you can stop being confused about money and start taking what we call wealthy-minded action.
We'll help you become a master of your finances and simplify investing so you can get started today. Take control of your financial future by downloading your free copy of the Wealthy Minds Blueprint now and start building the wealth you deserve.
Hello, everybody. It's me, Brooke. I'm recording a little disclaimer for my mommy, Dr. Brittne Halford, and her friend, Dr. Lisha Taylor. Just so you know, they're not financial advisors, tax professionals, lawyers, or financial planners. Everything you hear is for education and entertainment. It's not strict financial advice, you know. So use your best judgment, chat with a tax professional, and all those other people that you need to talk to. Thanks for tuning in today. Keep cruising on your journey to wealth and wellness. Bye-bye.
One of the most important things you can do is ensure you have long-term disability insurance. Long-term disability insurance secures your income if the unexpected happens and you are unable to work due to medical illness, chronic conditions, or an accident.
Unfortunately, all insurance agents aren't created equal. Some of them are so focused on making a sale that they fail to reveal certain necessary information, tell you about discounts available, or clearly explain the process. Pradeep Bhatt and his team at PKA Insurance Group are different. They have a reputation of putting people over profits and always doing what's best.
If you need life insurance or disability insurance, reach out to Pradeep and his team today. They will help you get the insurance you need with the service you deserve.